Hi Savanth, thank you for joining me this morning.
Thanks, Con.
Overall, how do you feel that the Australian economy is tracking in comparison to the rest of the world?
Look, I think we're certainly in a very good position. I think it's important to look at the growth of the Australian economy, that December quarter economic growth number. If you annualise it, the way the Reserve Bank takes the 6-month figures and annualise it, we're seeing growth of almost 3.4%, annual growth of 3%. It's amongst the best amongst the advanced world, and I think world-leading growth. And it just highlights that the Reserve Bank did cut rates, but it was from a position of strength rather than a position of weakness.
Fantastic. Turning our minds to the cash rate, it's at a historic low of 1.75%, which you accurately predicted another cut. Do you expect another cut, and do you feel that monetary policy is actually providing an effective tool in driving economic growth?
Yeah, Con, I think the reason that the Reserve Bank cut is important, and the reason they cut is because inflation is so low. The statement of monetary policy highlighted that there's a real deflationary aspect or a very low inflation below the 2 to 3% target band across the Australian economy for the next couple of years. The question is, does the Reserve Bank want to get ahead of low inflation? And so given that scenario, we actually expect another rate cut in August after the next round of inflation numbers, and potentially even another cut in November. So the threat of lower rates is here to stay for some time. Now, is it effective in supporting activity? I don't think people are significantly going to go out and invest because rates are cut once or twice more. But what it does say to households and businesses is that if you're holding cash, it's an opportunity cost in this environment, and there is an option there over the medium term to look at other asset classes to further your investment profile. And I think that's what the Reserve Bank wants to do: get people starting to think about that investment flavour.
Sure, that's very interesting. I appreciate your views on that. Going back to the cut to the federal cash rate, you've predicted that there's going to be another, or you're predicting there's going to be another interest rate cut. What do you think that will have as an impact on the Australian dollar, and with the Australian dollar possibly becoming low as a result of that cut? How do you think? What sectors do you think might benefit from such a lower dollar?
Yeah, we would expect that the currency would probably drift lower from here. I think if the Reserve Bank did cut twice, yes, we would more than likely see the dollar below 70 US cents. The real story now is not just about the Reserve Bank rate cuts, but what's the Federal Reserve going to do in the US? And we've got a very tame profile for US rate hikes. Probably we're expecting one rate hike a year over the next 3 years in the US, so extremely cautious by the Fed. The risk is they lift rates a little bit quicker than that, and that pushes the dollar down even quicker. I think a low currency net great for the Australian economy in terms of the tourism and the service sectors that will dominate off that. Agricultural exports will see a significant benefit as well. And importantly, we haven't seen, despite the dollar falling from parity to 75 cents, a lift in imported inflation in this country. So we're in a pretty sweet spot at the moment where globally commodity prices are weak, and it's not translating through as a result of higher imported inflation.
Okay. You mentioned, the US Federal Reserve lifting interest rates. How soon do you think they'll interest rates? There's been some commentary in the papers in the last couple of days about the US starting to consider hiking its rates up.
There has been some commentary, and I think a couple of Fed speakers are discussing that they may lift the rates a little bit quicker than anticipated. They seem to do this every couple of months, where they talk this higher rate story up, and it results in volatility in stock markets, and then they seem to come out and go, no, we'll be more cautious, we're not going to lift rates. And we saw it in December, we're seeing it once again. So it will add to volatility. I think the market has effectively held the Fed to ransom when it comes to rates, and that volatility in markets, I think, is going to be here for the next 6 months. So it's important for investors to really focus on good quality Australian companies or global companies, but really setting yourself up not for the next 6 months, trying to ride through the volatility and looking for the next 2 years. And I think the equity markets will provide some decent growth.
Sure. Turning our mind to our Asian neighbours, and specifically China, a lot's been said about China's debt problems. How do you expect the Chinese economy to fare this year, and what impact do you think that will have the Australian economy?
China's going through a transition, Con, similar to what we've seen here in Australia. It was an industrialising economy. Now you've got the shift in levers towards domestic consumption. And what essentially that results in is these sort of patchiness across the Chinese economy. So we expect it to continue to slow. There's been discussions around their debt There are issues around, I guess, local government debt, but you look at the size of the national economy, the fact that they continue to run trade surpluses between $30 and $40 billion a month. They own about 1.6 to 2 trillion worth of US government debt. And I think the debt side is not going to be the issue in terms of collapsing this economy. If anything, you've got more concerns around the fixed asset investment and the domestic investment story. But we would anticipate that the economy will grow between 5.5% and 6% over the next couple of years. And more importantly, the service sector-led economy here in Australia will benefit not just from the tourism numbers out of China, but the exports to China. And I think with the free trade agreements that have been signed, there's a real opportunity for business to look at avenues of finding a new market in that Chinese economy.
Sure. And turning our mind to, if I could, beg your indulgence to ask one more question. The Australian government's basically tightened some of the investment criteria for property acquisitions in Australia. That probably has an impact for a lot of Chinese investors. Do you feel that those funds might now go elsewhere in the world?
Look, I think if you go globally and you have a look at Canada, US and UK, the amount of Chinese investment far surpasses what we are seeing here in Australia. We're so small in the scheme of things. But I still think that foreign investment in Australia will be a big driver with where the currency is now. You think of where the dollar fell from parity to 70 cents, and that's almost a 30% discount on Australian assets. And there was a lot of Asian investors that were investing in Australia that weren't requiring borrowing to do it. And if anything, I think that trend will still continue. The growth story here in Australia means that global corporates will look at Australia very attractively as an investment case. We saw the takeover of Toll about 18 months ago. We've heard of a takeover for Pacific Brands from a US conglomerate. And I think the M&A activity will start more from a global front rather than domestic Australian corporates looking at each other much more attractively.
Okay. Thank you for those insights, Savanth, and thank you for joining me today.
Thanks very much, Con.